SOFI Stock has breaking news that you need to know, sending shares up almost 5% today. It also helps that service inflation seems to be falling, and I will share that data with you that came out today. And we got a pretty dovish speech from Fed Jerome Powell. So 3 very important things to share. Let's go ahead and jump into it. Hit the like button and subscribe to the channel if this is your first time here. Consider sticking around a while. You might just learn something that'll make you money. First up, SOFI stock is trading at $7.51 per share, up 31 cents today, up about 4.31%. So a pretty good day for SOFI following this breaking news. This article says SOFI stock racked up a rare bullish call. Only 4 Wall Street analysts rate the stock a buy, with the latest bullish call coming in today on Wednesday. Says SOFI Technologies has a relatively small bull camp among Wall Street analysts, but the gang just got a little bit bigger. Needham analyst Kyle Peterson initiated coverage on the financial technology stock with a buy rating and a $10 price target on Wednesday, writing that the company offers a nice balance of growth and profits. 18 analysts now cover SOFI stock, according to FactSet, with 4 of them holding buy equivalent ratings, 10 having neutral ratings, and 4 carrying sell ratings. Quote, this is what he said: "We view SOFI as a long-term winner in the digital lending neobank space, largely due to its focus on prime and super prime consumers and possession of a full banking license, which we believe provides the company superior unit economics compared to other consumer finance platforms that focus on lower income borrowers and or lack a banking license," Peterson wrote in his report. He also praises the company's high-growth lending business, which includes credit cards, personal loans, mortgages, and student loan refinancing products, among other things. The company's banking charter should enable it to see efficient and sticky funding that will make its financials less volatile. That could help SOFI stand out relative to other digital lending players with more fickle financing pools. Peterson said the company's lending business is the key reason SOFI has been able to achieve GAAP, general accepting accounting practices, profitability, and he projected the company will be steady on profits going forward, which we believe will help tangible book value build and support a growing share price over time. Peterson also wrote of a compelling opportunity in the company's technology products. SOFI's Galileo offering, for instance, provides services to other fintech companies while letting SOFI benefit from greater vertical integration in its own business. In general, the company offers services like lending underwriting that's powered by artificial intelligence, as well as card issuance. Quote, "We view these businesses as the crown jewels within SOFI, given their higher growth nature, 20+%, and lack of capital intensity and opportunities they provide to scale efficiently into new products or geographies," Peterson wrote. His $10 price target is based on a sum of the parts model that ascribes $8 a share in valuation to the lending business and $2 a share in value to SOFI's technology and other fee income lines, the latter of which includes interchange revenue. Considering SOFI stock is down well over 20% to start 2024, this new upgrade is really seen as a breath of fresh air for the SOFI bulls, because there's really so few analysts that cover the stock with a buy rating. A vast majority of analysts have a hold rating on the stock. Ultimately, when those analysts change their rating from a hold to a buy and raise price targets, that's going to be an upside potential tailwind to SOFI. I expect that'll happen towards the second half of this year as we start to get some rate cuts and potentially people start to refinance student loans and more lending overall starts to happen in the economy. But this was some really good news today for SOFI. It also helps that your ISM services PMI came in much better than expected, and much better, the headline number came in weaker. But in terms of services, and that's where you're really seeing the sticky inflation right now, services, housing, this was seen as good news by the markets. The number came in at 51.4. The estimate was 52.4. Business activity came in a little bit higher at 57.4. Estimate was 57. ISM services employment came in a little bit higher as well at 48.5. The estimate was 48. ISM services new orders came in at 54.4. The estimate was 56. So a little bit of cooling in services overall. But this is what really got the markets going. This is why the markets are doing well today, especially your interest rate sensitive names like a SOFI. It was ISM Services prices. This is kind of the inflation gauge within the ISM Services index. This number was expected to come in at 58.4, so high. Anything above 50 is considered growing, right? For prices paid, that would be prices going higher. 58.4 is a really high number. Let's say it for what it is. The number came in at 53.4. Almost the lowest number here out of any component of the ISM service data. So prices did not, it appears in March, to have continued to rise in services, or at least not at the most rapid pace that most people on Wall Street were expecting. This is a big win today for the bulls. This data today is not doing much for 10-year treasury yields. 10-year treasury yields really not doing much of anything. You've recently seen a bump higher in 10-year treasuries from about 4.2% now to about 4.36%. So you have seen a rise in treasury yields in general, but you are seeing the Russell 2000 outperforming today because this was just good news on inflation, potentially allowing the Fed to cut sooner than some people are starting to expect. The markets are still pricing in the first cut coming in June, but as we have gotten, stronger inflationary data, some people are starting to wonder if that could be July or September, right? And the odds are pretty close here for June even still. Today, there is 56% odds or a chance that we get a cut in June. So you're still majorly pricing in a cut in June. But there is a 41.6% chance of no cut in June. So extending that out to July, whereas July has 23.4% odds of 2 cuts by July, 50.4% odds of 1 cut by June, and 25.3% chance of no cut by June. So the incoming data that we get on inflation is really going to drive your interest rate sensitive names that you've been forced to push out these rate cuts. Starting off 2024, we would have already had a rate cut by now. We were pricing in the first cut in March. That obviously got pushed out, and then it got pushed out from May, and now it's, expected in June. As long as the data comes in like it did today, you're going to get that first cut in June. And that is precisely when I expect SOFI stock will start to do better. Fed Jerome Powell said today he does not think inflation is reversing higher. He says there are risks to cutting rates too soon as well as waiting too long. He also said it's too soon to conclude disconnect in monetary transmission. And he does think monetary policy is working and that monetary policy is tight. Yes, that's true. Monetary policy is tight in lending and, really lending like autos, homes, right? Refinancing, things of that nature. There's just some things the Fed's tools to fight inflation just don't work on. And that is services, right? That Taylor Swift concert ticket is not being influenced by the Fed raising rates at all. It doesn't even matter. It's nothing for, impacting that, right? Just for an example, and there's other things as well, whether or not you get your lawn mowed. Well, it's definitely not going to depend on what the Fed is doing with their policy. The Fed does go on to say that if the outlook continues to evolve as expected, it will be appropriate to start reducing rates some point later this year. Powell also says the Fed continues to believe the policy rate is likely at its peak for this cycle. So likely at the peak for this cycle, not 100% confirming that, but again, you would have to see some kind of huge ramp up in inflation to get the Fed to start raising rates again. Remember in 2022 when inflation was like 7, 8, 9%, and the Fed funds rate was like 4.5. We were rapidly raising by like 75 basis points at the time. But everyone was like, you have to get the federal funds rate higher than the rate of inflation. And that's where people were panicking because if inflation stalled out at like 9%, that would mean you need like 10% Fed funds rates to bring that down. Well, inflation started to fall, and now look where we are. If you're looking at inflation on a year-over-year basis, you're like 2.8% core PCE. the Fed funds rate's at what, almost 5.5%, 5.25 to 5.5%. That is substantially higher than the year-over-year rate of 1-year inflation. So odds are you'd have to see a lot of inflationary pressures to get the Fed to raise rates again. Now, that is a possibility, and that would be to some degree a black swan event. And if that were to happen, SoFi stock would definitely not perform that well. But I don't think that should be your base case. But it might take longer to start getting some cuts. Maybe we don't get them right in June. That's why the data is going to be very important to be paying attention to. Now, let's take a look at option activity here today for SoFi from hedge funds and institutions. So far, you only have one order totaling about $11,000 with positive order value of 100%. So this was a bullish trade. You have a May 17th $8 call. This fund bought 206 of them. So a relatively short-term trade going out a little bit over a month here, about 5.5 weeks, and targeting about 50 cents higher, including the break even of about 51 cents. This firm saying that SoFi could reach about 850 by mid-May. Pretty bullish call, not the most, bullish trade we've ever seen, but definitely a bullish trade nonetheless. And we do have short interest that is over 20%, currently at 20.04%, $1.42 billion currently in short positions with 3.52 days to cover, almost 200 million shares that are currently sold short, 198 million shares that are currently out on loan, and you do have a short score of 70.25 out of 100. Cost to borrow fees today sitting at about 3%. So not a lot of shorting activity taking place today, which would make sense. Now, to the downside, you want to be watching this level around $7.20 per share. That could be serving as a solid level of support if we do get downside from here. Now, to the upside, I think it's harder to tell where your levels are going to be. Around $8.20 per share, you have a gap to fill up to that level. And then to ultimately fill the gap, you'd have to rise to about $8.58 per share. That's probably where we trend. Again, like that trade I just showed you is kind of targeting around $8.50 or so. That's probably where we trade over the next coming month or two. You also have all of your major moving averages, your 50, 100, and 200-day moving average sitting in this range also. You have your 50-day moving average at $7.85, your 100-day moving average at $7.99, and your 200-day moving average currently sitting at $8.23 per share. So if you get above that 200-day moving average at $8.23 per share, that's where you could be looking at exponential gains above that. That's potentially the level even in which shorts may start to cover on some of those short positions as well. And 20% short interest, that's not a small number, although SoFi is not the greatest short squeeze candidate. When you have short squeeze numbers of 20+% in the short term, that can definitely drive the stock higher if shorts do start to cover on short positions. So let me know what you think about all of this information. Let me know what you think about this breaking news, the ISM service data that shows a slowdown in the prices paid for services, and what Fed Jerome Powell just said. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.